Welcome to the Ideal Investor Show. This is the podcast where we help you challenge your mindset and discover where you are. Tired of stories about other people's success? We can help you change your life, determine your time freedom point, and join us on the journey to financial success. Let's go. Hey, hello. Welcome back to another episode of the Ideal Investor Show. Today, I want to touch on something from a little bit of a different perspective, because you know that I've always been saying it is important that we have a diversified portfolio. And I'm totally behind that, and I want to strengthen that. And I have, multiple times told you what the distribution should be, how much real estate and other stuff and so forth. But one thing that I think is also important, especially because I know that a large number of our audience is actually listening and watching our episodes from the United States. And when you live in a country and you're using your currency, you're paying everything with dollars, whether it's with your bank card or credit card or checks or stuff like that, you're just using dollars, right? And unless you go somewhere on vacation where they don't have or accept dollars, or they don't accept your credit card, which is very rare these days, you might have to look at what is the exchange rate. And not that many people actually really have to do this. I mean, if you go, for example, in the summertime and you visit Europe somewhere, then yes, you should probably or will probably have to exchange at least a few dollars into euros so you can pay for like a coffee or a meal or stuff like that. So that's pretty much the only time in normal daily life where you get in touch with what is the exchange rate. I see it always a little bit as my duty from both a diversification perspective, but also for some other investment reasons, to kind of keep you up to date on what's happening with this kind of stuff that is all related to our investing. When it comes to the US dollar and the exchange rate, I want to let you know that for one, and that probably makes you feel good, at least recently, I would say for the last 12 months, the US dollar has strengthened, meaning like the purchasing power, how much you get of anything with dollars, has been getting better and better. And that's true. I mentioned the euro has gone down against the dollar. The biggest one that has really gone down, and I don't know how many of our listeners ever go to Japan, but the Japanese currency has really lost a lot against the dollar. The Chinese yuan, I don't know if you ever go there, has lost quite a bit. So other currencies have lost against the dollar. And the question, and I want to just tell you real quick, what is the reason for that, in my opinion, and other experts' opinion as well, is if you look around the world and you ask yourself, if I had huge amounts of money, but I don't want to necessarily put huge amounts of money for very long periods of time into something, and I also don't want them into something that is kind of risky, then you basically have to make the choice, okay, well, if I want to spend and invest huge amounts of money for relatively short periods of time, the best place to put them is in government bonds. And obviously, if you're sitting at your table and say, okay, well, which government bonds do I invest in? I would think that I don't do it because I don't have huge amounts of money, especially not in cash. But if I did, I would look first to say which countries offer bonds of the duration that I like, anything like 6 months, 1 year, 2 years, 3 years, something like that. All right, so now I have a list of all the governments that do. And then my next thing would be to say, okay, well, of these different governments and the associated countries, how safe are they? Right? If you say, okay, is the US government and US dollar safe? Yes. Is the euro government safe? Yes. Is the Japanese yen and the Japanese government safe? Yes, it is. Even though the exchange ratio is down, but it's very safe. I think you could even say the same thing for the Chinese yuan, or renminbi as it's called. Same thing. But then there are places like if you look, for example, in African countries, or if you look, for example, at Argentina, their currency is fluctuating up and down easily 20, 30, 40% within 12 months. So that could really be a lot of risk, even more risky than investing in stocks. So you would probably take that out. So now you have the list of the countries where you would say, okay, I consider these reasonably safe. And then you go, obviously, everybody would do that if you want to make money with your money. You would say, okay, so now let's look, where do I get the most if I give some of my money into these bonds? And if you currently do this globally, in the safe countries, you get by far the most for your money when you put it into dollar bonds or US government bonds. And the comparison is actually pretty wide, right? Like, if you think about it, you can get 5 and 6 and 7% bonds in the US dollar denominated. And in other places, you get anything like 3, 4, maybe if you're lucky, 5%. Right? And yes, it always sounds like, okay, that's only 2% more. But if you have 5% or 7%, let's say 5% and 7.5%, that's 50% more that you get in return for your money. So that's a lot more. And that is exactly why the dollar is so strong. Because anybody who has this huge amount of money and wants to put them in something for the short term for interest obviously goes where they get the most interest. And why is the interest so high in the United States? Because the Federal Reserve, much longer than anybody has anticipated, didn't lower their interest rates. And the interest rates is not just what we hear in the news, is how the banks loan money to each other, basically the Federal Reserve Bank giving money to regular banks like Wells Fargo or Chase. That's that rate that they're always talking about. But it obviously trickles into the rest of the economy, including into government bonds. So what does that mean for us when we're looking at our diversified portfolio? And I wanted you to be aware that for two components that I'm always talking about, this is actually relevant. The one component I'm talking about when we're talking about diversification is that I recommend that you buy or own about 10% in gold and silver coins. What is the price of the gold and silver coins is the basically published price for gold. Now, when the dollar is strong, meaning like it has a lot of purchasing power, then that means you get a lot of gold for the dollars that you basically have. Right now, it's around 2,300. When the dollar gets weaker, it's kind of an inverse relationship. The price or the value of gold goes up, right? So if you buy gold now for 2,300 and the dollar gets weaker, everything else remains the same. The gold for the same amount, nothing else changing, because it's just the value of the currency could easily go to 2,500 or more. And it has nothing to do with the gold or the value of the gold or anything or the silver coins. That's one thing. And by the way, the same thing is true for Bitcoin. Bitcoin is denominated in most of the platforms in dollars, right? And that's also when you go and say, okay, what's the current price of Bitcoin? It's around $60,000. But Bitcoin is a global currency. So you could switch the currency and say, okay, well, how many euros do I have to pay? How many Japanese yen do I have to pay? How many Chinese yuan do I have to pay? How many Argentinian pesos do I have to pay, right? So, and the same, by the way, is true for the gold coins. So if you take your strong dollar to buy these things right now and the dollar weakens in the future, which is very likely with the debt that we have, and after the Federal Reserve at some point in the next few years is going to lower interest rates, then people are going to take their money other places again. But what you will have gold and silver coins and Bitcoins where you get more dollars for them just because the value of the dollar has gone down. And that's something I wanted you to be aware of. What does it mean when we buy these diversification assets like gold and silver coins and Bitcoin with our strong dollar right now? And then if you haven't really diversified your portfolio yet, I would strongly advise you to take advantage of the current situation, because who knows how much longer it's actually going to be in place. We all see and we all know how much new debt the government is piling on all the time. So at some point that will come back to haunt us, but right now it's not. And so because it's not, I would recommend take advantage of it. That's it for today. Be well and stay safe, and I talk to you tomorrow.